Good morning, everyone, and welcome to this live trading webinar. I hope you had a good rest of the weekend. William, Maria, Nicolas, Martinez, Larry, good morning to every single one of you guys. Ruben, Irene, how are you doing, guys? So let's get started. And as usual, with a risk warning, this content is for general information only and is not intended to provide trading or investment advice or any personal recommendation. So for our new traders here, I would like to inform you that every single Monday, you had the opportunity to listen to the weekly fundamental analysis. And as I recorded and uploaded on the podcast section, how to find it, you just simply visit the ADMIRALmarkets.com. And as I show you here, you can type it on the bar at the top of your browser. Then ADMIRALmarkets.com opens analytics and the weekly trading podcast section. You can scroll down. Some very few people, they played it from the list. Most of the people, they just download it directly on their devices through Spotify or any other platform. And of course, don't forget to download the mobile application, especially if you are into investing as well with us. Now, let's change the screen. So, guys, let's start with the pound against the US dollar on the daily chart. By the way, I was playing a little bit with the charts, and it looks like that these colors, they suit more. It's easier for through the live trading sessions for the visual, to be honest. So I prefer to keep using this. So Ebrahim, good morning as well to Ebrahim. So pound US dollar weekly chart. By the way, guys, I found it interesting that many of you're still lacking the strategy. And how did I found that? Of course, from your emails and the feedbacks you leave on the Zoom after we finish the session. So, and I encourage you all the time to leave this kind of feedbacks about trading, about what are you going through in your trading. So I have a better understanding, what do you need in trading? And many people, the outcome of their feedback, it's that I understood that they lack this strategy. So from today, I will be giving you some strategies out there so you can implement and apply in your trading. Okay, so let's start with the pound against the US dollar on the weekly chart. What I want to see on the weekly chart, I want to see basic market direction. I don't care what happened here, because here it's 2021 and we are not long-term investors. We use leverage, we get into the market very fast, and we want to play the price action from the areas of support and resistance. So we have high probabilities setups. So weekly chart, moving averages, they are pointing upward. Therefore, they indicate that the market is bullish. But really, it's been about 6-7 weeks. The market is in a downtrend, and we can see it on the daily and 4-hour chart. So what I want to see here is that the price pause at this moving average. However, the information from the weekly chart now, it doesn't add that much of value in our trading. Why? The next area of support, it found to be this one here. And the next one, it's going to be this one here. So pretty much we can say that we have this area of support. There is more for the price to move if it's going to break below the previous week's low, or if it's going to push to the upside. The next area of resistance automatically is the previous weekly candle high. Please note this down. Next, daily chart. If we do analysis on the weekly hour, on the weekly time frame, then we're gonna use either the daily or the 4-hour chart to enter the market. And then that's where we apply strategy. Exman, Darshan, Davis, Mr. Nick, Rumen, hello everyone and welcome to the webinar. Darshan commented, I'm very surprised that Aussie US dollar turn around. Yeah, look, we're gonna comment on that one and it's on the hot for this week. I will explain you about that. But guys, so we find that on the weekly chart, there is this downtrend. We find out that last week, the price closed below the 40 weekly period moving average, and the 40 moving average is equal to the 200 moving average on the daily chart. So one of the most powerful strategies to trade the currencies is the Bollinger Band strategy. Not the Bollinger Band we buy blindly on the lower band and we sell blindly on the upper band, like this one here, or when the when the price, or to trade the walking the bands. Walking the bands, it's a famous strategy. Many investors pretty much apply it. When the price closes outside of the upper band, they buy and they keep the position open until they see a close below the band. But really in Forex market, imagine if you, let's say just a random example, you bought there, price closes outside of the band, stop loss there, and you close there. So it's barely you make 1-to-1 risk. Okay. Or in this occasion here, price closes there, stop loss is there, you get out here. I didn't find this suitable for the currency trading. Okay, stock trading, when we don't apply leverage, absolutely fine, it works pretty well. But what I like to how I trade the Bollinger Bands, regardless the time frame, and that's the beauty of this strategy. You can combine it with a price action. Higher time frame gives you the direction, and you go on the daily or the 4-hour chart or 8-hour chart. If you have 8-hour time frame, it's a very powerful time frame for currencies, and I can show you how to trade it, but you have to check on your MetaTrader if you have it. Okay, and let me know. So what ideally we want to do, we want to sell in this market. Okay, here it's a downtrend. Market makes lower lows and lower highs. Now it makes a new low. So we want to sell where? We need at least, write this down. In this strategy, we need at least 2 confluences. We need 2 confluences. Why? First, we need to see the price comes in the middle of the band and then sell it, or we need the price to touch the top of the band and then sell it. But that's the one. The second, it has to be with the appropriate price action setup, like this one here. Rejection at the top, rejection at the middle of the band in a downtrend, boom, bearish candle, bearish reversal, we can sell it. That was an inside candle. I don't used to trade inside candles, but other traders, they successfully do it. So again, price retrace back to the middle of the band, and then we wait for a price action to appear, and then we sell it. Now, other traders, they go a little bit beyond that, and they also add some FIP retracements, like from top to low, and they want the 61.8 to be rejected. And in this occasion, the 61.8 was rejected. And we can't just keep it simple, guys. I'm telling you, the currencies on average, they give, you're going to find some good trends every single month. If you can capitalize a couple of trades with 2 or 3 reward to risk, I mean, you can be ahead of the game. You don't need to go for 5 and 6 and 10 to 1. this stuff, you have to be willing to take losses up to 70-80% to go through these high win ratios. But if they occur, it's absolutely fantastic. But if that's not what you want to do consistently, and you find that it doesn't resonate with your trading personality, then you just let it go and you just stick to simple stuff like the things we teach here, things that I trade for 12 years so far pretty successfully, and it makes your trading journey much more efficient. Faisal said, thank you for this. Just a quick question. What settings is the band on? Very good question from Faisal. It's the default settings. It's default settings, insert, indicator, trend, Bollinger Band, whatever is here. Period, it's the 20, and the deviations is 2.0. I didn't even, and I just changed the color to Dodge Blue, and I just pressed OK. So these are the settings. X-Man, same. Trading View has 6 hours. Yes, David, agree. 8 hours, absolutely. You are very welcome, Fasal. Rumen, Danny, hello guys. Hello, Danny. So this today, you can maybe ask me, Theo, what are your bias for intraday? I wouldn't take a shot for the intraday. Yes, most likely we're going to see some retracement, but I don't know where this retracement is going to stop. And that's the thing. It's a low probability to try and find intraday where the retracement will stop. And instead of trying to get some, maybe some losing trades until you get the entry right on the trend following. So what can we observe, what can we see in this market is that this is a swing high, this point here. So if you want to mark, because there are traders, they trade order block setups here. Here it's, let's say, an order block that can cause some pause in the market if it tapped into this area. For me, I like to use also the fib retracement. There is 61.8 fib retracement here. It aligns with this order block here. So I will delete this order block. Really, I don't need it. Or I will just keep this tiny area. I'm not interested to sell the pound at 50%. I'm interested to sell it at 61.8. So with this in mind, we can go to the 4-hour chart and we can wait for the price to come here. If it price makes it on the 4-hour chart at this area at where we marked, let's delete this stuff. So let's clean up the chart. So if the price comes here, guess what? Likely the upper band, it will be hit. So price at an area of resistance, 61.8 as well. So 2 levels of confluence. It's going to hit the upper band of the Bollinger. So 3 levels of confluence, strong price action to show reversal there. Pretty much that's all what we need, right? And yeah, that's all what I will be looking for. Next one. So guys, now I'm giving you strategies. I hope you can understand and apply these strategies in your trading. So next one, let's check the weekly chart of the euro against the US dollar. Price pretty weak. Here it's the next area of support found at the 1.06. Price made lower low on the weekly, so we can look for some corrections on the daily to short it, right? Now, there are few areas. The first area is this inside resistance here. We need clearly 2 candles on the left, 1 candle on the right to not to interact with this low, and 1 penetration only. We had it here when the price closes below. So this is a strong area of resistance. I can mark it on my chart. Then I would like to see the retracement of this swing to be from high to the low, about 61.8. It's here. So if this level won't hold, then I will be looking to come somewhere at the 61.8 and keep monitoring the price action. It's a little bit, it's going to need some time for the price to make this. But now you notice that most currencies are on this retracement. Let's go to the Australian dollar, US dollar. Remember on Friday, we commented and I put that thumbnail on the YouTube that double top, question mark, what to watch on this double top. So I marked that we have some bullish divergences here and the price came at this level of support. It's been a while. This is a strong level of support. It's been a while that the Aussie is in a downtrend, and at some point it needs to make some retracement before it continues. Now, as the majority of here, it's the what we call the balance between buyers and sellers. Now, first, we were expecting the market to break below this support, but the sellers, they didn't come aggressive to break it. On the other hand, we were expecting the buyers to be aggressive and buy it with the limit orders. But again, they didn't come to buy this market. So it left the retail trader like us with those question marks. So what are we doing now? What's best approach to trade this Australian dollar, US dollar, right? And in my opinion, is at this time, we want to just be out of the market. Some people, they're going to say, okay, why I don't try to buy these inside candles with a stop loss there? Yes, absolutely, you can buy it. But do you know for sure that this is going to be a trend reversal? Who knows? Remember, it's been many months ago. Remember, we were trading the euro against the Canadian dollar on the daily chart with a strong range. It kept for about 3-4 months this range, and we were buying the bottom, we were selling the top, and so on. And it was in a downtrend. Market was in a downtrend, and at some point it broke to the downside. So how do you know that every range that it touched the support, regardless of divergence, it's going to end up with a break to the upside and trend reversal? We don't know that. Only retail traders don't know that. And if you find someone tells you that, hey, I know what's going to happen, better not to listen to this guy, okay, or to this person. Maybe it's a male or female. So next one. So bias for today. It's, remember here, you can see that here it's an order block that can cause the market to stop and reverse. If we penetrate this order block area, then there is another area of resistance here to keep an eye on. So here are some obstacles. Next one, New Zealand against the US dollar. Let's put the new template. Weekly chart. Moving averages, they are pointing downwards. There is a strong downtrend. Here it's a strong resistance. At this point, the obvious, most recent resistance. No point to mark this resistance on the chart. There are so many. As a technical analyst, I'm telling you for sure that every weekly candle high is a possible resistance. Okay, this is a very strong and obvious resistance, of course, but retail traders, if you are trading on 5-minute chart, on 15-minute chart, 1 hour, 4-hour chart, daily chart, you really need to pay attention to this one. Because imagine, I told you multiple times, if the price make it and tap at this area, and let's say you are you have a buy positions and you are trading on the hourly chart, which consider a little bit higher time frame, and you have a stop loss of 30, 40 pips, the price can easily create some fluctuation before it continues to the upside. So that's what you need to understand. Not that every resistance it's going to cause the market to fall to the downside and create a downtrend. No, resistance penetrated, resistance and support, they're meant to break for the trends to be continued. But the fluctuation, write this down, the fluctuation it's going to cause in the market, maybe it's going to kick you out of the position, or if you are in a profitable position, maybe it's going to swap out your profit and then it continues to the direction. So from now on, every weekly's high and low depends on the direction. Of course, it's a possible resistance and support in the market. So on the daily chart, what do we expect? That was a very narrow area to start. I'm not going to start selling here because there is not a strong area of support, of resistance that I would like to sell from. I prefer to see something around here that it's already marked. So weekly support and resistance can be used for dailies and 4 hours price action among with the entries. Okay. Next one, USD JPY on the weekly chart. Price is making higher highs and higher lows. Of course, we expect some correction down the track. Let's check the daily chart. Price topped at this area here. It flushed out likely many stop losses on the market from people. They try to sell it right at this level. We observe that there are some bearish divergence on the RSI or any other indicator you may plot. So we have to find some areas of support likely for the market to bounce to the upside. So for me, this area here is the strongest. This low here, also there is 10 pips on the daily chart, really is nothing. And if you like to mark it as an area, if that works best for you, take the low, capture the low of this this bullish engulfing, and capture the lows of this one and mark the area of support. So if price comes here, if you don't like to be a swing trader, if you don't like to monitor 4-hour charts or 1-hour chart, and you are a 5-minute chart, nothing wrong to be a 5-minute trader. I'm also a 5-minute chart trader or a 15-minute chart trader. If you are trading that way, you can wait for price to come at this area of support, and that's high probability area that the price can bounce to the upside, but not necessarily to create an uptrend. You can use this, and if you see on the 5-minute chart that the market from lower highs and lower lows, it creates a reversal, bottom reversal pattern, and makes a new higher high and higher low, you can use it to scalp or to take, let's say you have a 20 pip stop loss and you go for 40 pip target, you can easily do this stuff. Wait for price action to touch the lower, the daily's time frame, and go on the lower time frames to find opportunities to buy yourself, depending on the direction. Massive gaps, Indian pair, David, absolutely. Larry, we will have a look at the goal, of course. Cherry, good morning. Danny said, Theo, what is your FIP settings? The default settings, guy. I don't change the FIP settings. Surprisingly, I saw some videos on YouTube last week that they put some weird FIP settings because they just backtest and they find out that they the 80% something, I mean, for God's sake, there is a golden ratio, and that's the 61.8. And for high probability setups, please stick to that one. Sajida said, pound US dollar, 15-minute analysis, please. 15-minute analysis, we do the daily analysis. 15-minute analysis, you just find the the entries and your exits from there, guys. Sorry, not enough time on this webinar. I hope it was for 1 or 1.5 hours this webinar, so I can go through many stuff. Finally, the Canadian dollar. So here it's the resistance on the weekly chart, this high points here on the daily chart. This high point caused the price to stop and reverse. On the 4-hour chart, it wasn't really something to take advantage of that. But yeah, on the daily chart of 8 or 8-hour time frames, it's also a very powerful time frame to trade. So yeah, we do expect to see some move to the downside. Market, it doesn't have any trending character here. It's just moved sideways, as you can see, very choppy drawing, also very choppy price action, and that's the daily chart. So we can just expect the market to move downwards. I do find some areas of support down here, if you prefer areas. So yeah, we will check the gold right in a second. Let's have a look what's going on the DAX. Daily chart indicate that bullishness might be on the go. Let's check the 4-hour chart. There are some strong resistance levels here on the 4-hour chart. So, and that's our support. 5-minute chart, unsuccessfully this candle here didn't make it. So two minutes for the London Open. If we had some time on this webinar, really, I could teach you another strategy to take the DAX, but unfortunately the time is not enough. So we could play some price action setups. They come right at, actually I will try it. We have, how much time we have until the next webinar? We have, let's say, 15 minutes. If you want, we can wait. If you don't want to place a sell stop or a buy stop order here, although I will place one. There are 16. I'll place a buy stop order and a stop loss below these lows here, just to take the swing to the upside. And so 10 a.m. I will stick only with this buy stop order here, and then I will show you if we have this price action appear on the chart. Then we're gonna go for that and see how the market will behave. Ibrahim, please show us the strategy. Why, Darshan, why does USD JPY keep stalling at the top? Thanks. Look, there are many known and unknown reasons why, with all these financial turbulence going around, it's very hard to say exactly what's going on. Guys, 12 points on the DAX have already been given by the market for those they want to close the trade. For me, I will close the trade now on the SIG. Up, modify, come on. I'm closing the trade right now. So I got 17 points out of the market, but let's wait for this candle to close. There are many times, like we saw on the when it was on Friday and other days last week, we noticed that there are many false price action appear right 5 minutes after the London Open. Okay, in this case, we managed to get 17 pips out of the. Actually, I think I got 16 pips out of this this move to the upside. 16 points for my friend Darshan. Yes, points, not pips. Well, so you can keep monitor the price just in case it will show some reversal price action after the next 5 minutes or so. I'll try and figure out if we can amend it a little bit, the webinars, and keep them for longer time. Are you guys happy with that? Do you have time available? If we do that so and stretches these webinars, because that way we can do more analysis. I mean, we can go intraday and see some setup like you asked me. First, you asked me about the gold, so I have to look at the gold weekly chart. I don't see anything on the weekly chart. Last week we had this inside candle, and again, don't expect that every time you're gonna turn to the weekly chart, you're gonna understand everything what the market does. Sometimes it does it, it's in directionless. Okay, you don't have any clues. So inside candle, yes, a little bit bullish here. I don't see any bias on the weekly chart. On the daily chart, though, let's try to zoom out. I don't understand anything here. Simple as that. Because the market, yes, we can create some structure, but is it a structure that gives high probability setups? If the answer is I don't know or no, then we just go to another market. Now, if you have watched the interview I had months ago on the Market Talk series with Steve Ninson, the guy who wrote all the books and who introduced us to the candlestick patterns, you would have heard him clearly say that the candlesticks are not meant to be traded in isolation. They have to be traded from strong support and resistance in a technical analysis concept with the market. Not just because there is an inside reversal candlestick, we're gonna trade it, just we don't know where it appears, why it appears, and all this stuff. So in this one here, I don't have any bias for longer time frames. For short time frames, I mean, for an hourly chart, for 5-minute chart, yeah, there is. Okay, spot on. On 5-minute chart, we identified an uptrend. On 5-minute chart, though, there is a strong resistance here. Now, if you are about to, first, I will not buy this. Here it's what divergences are best. Oh my God, guys, this webinar, it's like a gold for you. So market, may write this down. Please pay attention to this. Here, price makes a higher high. So let me change the color. Yeah, I also got excited now. No, you cannot see this one. Price made a higher high. Indicator made a lower high. How do we call this? We call this bearish or negative divergences, and usually is the strongest one, and we call it A class. All right, that's a little bit more advanced. So we have a strong negative divergence. What does this mean? It means it's telling us that this move here, this impulse move, comparing to this impulse move here, is not that strong. That's what it tells us. It's like the market is lacking the momentum to continue to the upside. That's what it means. So what can we do? We can wait for the market to correct to the downside. Simply, divergences, it's a warning that tell us do not buy the breakout. That's it. Do not rush and buy the breakout, because this move here is lacking the momentum comparing to this move here. Now, does this mean, does divergence mean that because they indicate this market behavior, does it mean that the market will behave exactly like this? And the answer is no, it doesn't mean like that. But there is a high chance that the market, after we spot the divergences, it will retrace, and either it's going to create a new low and continue to the downside, or it's going to come and retest some areas of support and push to the upside. That's what it means. All right. I hope you understand this. Now, on the gold 5-minute chart, market approaches a strong area of support for resistance, and maybe it's going to push to the downside. So that's a false breakout here. For me, it worth some attention. 5-minute, I turn it to 5-minute chart on the DAX. So bearish divergence. Price made a false breakout with this pin bar here. What we want to see, ideally, we want to sell the high with a stop loss somewhere about 20 points, and we target 40 points. So I would like to do that. So in 1 minute from now, let's see how this candle will close. I'm going to give the market a little bit more room. How much is for this? It's 24. Let's see what this price action will do. If it's going to break to the upside, then better we wait until the market hits at this 4-hour resistance. You see, it's just dropping down. Very powerful strategy, this one, guys, but I don't have time to teach you right now. So I think I have to wrap up for now. Otherwise, somebody, a colleague, will start another webinar and cut us in the middle. So I would like to wish to everyone to have a fantastic trading day ahead, as well as a normal day. Thank you for your participation. Please leave some comments, some feedback. If you like this video, make sure you like and subscribe. And I look forward to see you tomorrow at the same time. Thank you so much. Bye, everyone. Bye.